Okay. Good morning. This is Simon with toughtrader.com and Trade and Perform Coaching. Let's get started. We're gapping up this morning. Apple got upgraded as per usual. Trend day down leads to gap up the following days. There's responsive buyers underneath, and it looks like yet again that yesterday's going to end up being a one-day wonder. So let's go through the metrics of what we're looking for today. Most importantly, before I ever start the day, right? I'm not trying to figure out what the market's going to do. The first thing I'm doing is getting clear on what my process is. What I want to see so that I can enter or exit a trade is more important than what I think the market may or may not do. Really actually doesn't even matter what the market may or may not do. It has zero impact, right? My read yesterday when I came in the morning was that I had no intention of shorting whatsoever, right? Short showed up there was weakness in the delta. I had weakness in the delta. The trade set up for my process, and I was willing to take the stop. Those are really three critical points in that monster trade that I had, right? First of all, I did not know or think that we were going to push back in, right? But then I switched from what I think about the market to what my process tells me to do. And then the decision became binary. Am I willing to take the loss? Am I not willing to take the loss? And that is it at that point, right? So I'm going to go through the trades for today. I'm going to go over the trades or what I'm looking for today. Let's get started. Before I get started, really quickly, I know I have this here. Past performance is not indicative of future results. This is for educational purposes only, right? You can lose your ass trading futures. If you do not know what you're doing, if you're even just a little bit confused, like close but not close enough, you get smoked. That's how this thing works. Let me make sure everyone has the link on the Twitter stream real quick. It's rare that we don't have everyone in the room, so I'm going to assume that they don't know that I've started. There we go. Now they do. Okay. So, okay, great. So, anyway, long story short, have a risk management plan in place, right? Everyone loses money. I lose money. Everyone I know on the face of the earth loses money trading. The difference between the good traders and the bad traders, maybe the only difference between the two of them, are that the good traders do not allow themselves to draw down significantly. They stop trading when they're doing poorly, or they simply find a way and make a decision to only trade what they're pretty damn sure is going to make them money. And I know that sounds weird to someone who hasn't traded a long time, but there are traders out there who simply know what their winning trades look like, and they don't do anything else except their winning trades. That's the best way I have to describe it. And when you get to that point, you'll know it. 1 second here. I did not mean to do that. File, new desktop. There we go. And let's open today's charts really quick. 7. There we are. Get Globex high and low in really quick. And then we'll roll to getting what we're looking for to get set up. So we will start with, let's do this. And let's shift these two. Although oddly enough, let's get this down. Let's get this a little bit bigger. Oh yeah, one last reminder. When the volatility flies up, guys, NQ is a much better, ES is a easier trade to control the volatility on. Okay, so on ES, I have $27.94, $27.94.25, just past the top of that yellow zone and the 50-60 retrace, 94.25, still within yesterday's range. Globex high, Globex low came in at 27.79, right in between the point of control. You'll notice I did not put a white zone in ES yesterday. The point of control for the TPO and the point of control for the volume profile were massively spread apart. That splits out your TPO traders from your volume profile traders, and it essentially psychologically, at least I believe, splits your support levels, and so there was just nothing there. So importantly, this is let me get this right really quick. This is value area high. It's at the high, and we have a poor high, right? This is value area low. We are obviously opening right in the middle of yesterday's range. So I want to be clear about this. When we open in the middle of a value area, right? I need to open this really quick. Okay, there we go. When we open in the middle of a value area, okay, it becomes what the typical price action in that area when we open in the middle is to push up. Wow, I hate that color. I expect something on the parameters of this, whether this goes over a 10-point range, a 15-point range, or a 5-point range. I expect it to whipsaw back and forth within this range. That is typical behavior when we open up within prior day's value. That is what's to expect. Why is that important? That is important because let's say you expect we gap up and you expect gap fill, or you expect to retest the Tuesday's low, right? It's important because you might go, oh, we gapped up, right? I'm going to short, and you get a push in, and then you go, well, we're obviously going to gap fill or Tuesday's low. And the next thing you know is it slams back up this way, right? Then it slams down, then it slams back up. And then it might be all the way out till 11 o'clock till we get down to your goal. Meaning, let's say you had the correct read on the market. You can still end up taking 2 stop outs or being down on the day by emotionally chasing this or not being prepared, right? Maybe you capture the very peak of the rotation down and it slams down. Let's say it goes down 5 points, right? And you think, great, I've got straight shot to Tuesday's low, and you end up getting stopped. Or conversely, let's say you thought Tuesday's high is going to get taken out, retested that Globex high, retested the Globex high session, right? Or wherever, break to new high, right? By the way, that 18 on the chart was an accident. Shouldn't be there. Remove that, please. Okay. For whatever reason, you think we're going to 28.20, right? You can have the right read and go, hey, we're going to 28.20, but because we're opening up inside, you end up getting caught in this slam back and forth, and then you see it go up like this, right? My reasoning behind this is if you understand that this is likely to happen, you'll make sure that you capture the edge correctly, but then you don't get the problem isn't getting stopped on this. The problem is getting emotionally upset that this is coming back on you multiple times. So just know this is most likely the outcome we had this morning. What are the alternatives to this outcome on ES? Is that we gap up, we hold above the TPO point of control. Now, in order to have a trend day up, we've got to get above Tuesday's high, according to my methodology of trading, because I've got to get above the prior day's value area high. So I'm not even looking for trend day up unless I can get above 28.08, right? I might be totally wrong about that, but there's a couple of things. First of all, we're already stretched up 10.5 points. If we extend another 10.5 from 27.93, that puts me up at 28.03. It's hard, even under the best of circumstances. It's hard, even under the best of circumstances, to get the market to continue running after 20 points. I realize there's been a couple of days that have been the exception to the rule over the last 2 weeks, but I expect exhaustion usually on the upside between 15 and 20 points, and we're already up 10. If I take the 93 and I look at and I add 10, I'm going to start to look for rejection between 28.03 and 28.08. I'm going to look for some kind of topping process or rejection out of here. And where am I looking for? Because we are within prior day's value, I'm just looking for a trip back to the mid. I'm not going to assume that we're going to trade all the way through value and push back down because I'm not bearish. We're still at the top of the market. That is my plan for ES, right? I'm not trading the first 30 minutes. I'm letting it go. I am cognizant of what the potential rotation is. I'm also cognizant that there's news out overnight and the inventory is long coming today. Why do I know that? Because we're trading near the high, and right, additionally, the most volume went off at 27.92. I know everyone's long up here. I don't have to guess about it, right? So the normal process would be, if that happens, is to even if we're going to end up here and we've trended up all night, usually there's a shakedown. We get rid of the excess inventory to the long side, rebalance, and then push to the upside. That would be a normal process even if we were going to come back and retest Tuesday's high. Additionally, if you look at how the process laid out, if you remember, and it's important to keep in mind, when we roll over, it is normal. See how we had this See how we pushed up yesterday, pushed up, rolled down, and then kind of came back for a test before finally sinking. So take this little pattern that we have here, right, and now apply it to a day time frame. We push up, we push all the way down, and then we exhaust ourselves as we come all the way back up. Maybe we make it all the way to the high. Maybe we don't make it all the way to the high. We exhaust, and then on a larger time frame concept, then we can come back down and re-examine these. Now, this whole thing may take 2 or 3 days to play out, but this is a very common pattern, right? Just like when you push to the upside and then you come back and push back to check up on prices before you start accelerating back to the upside, right? So that little pattern that plays out on both sides of the spectrum, right? And it plays out on smaller time frames as well and larger time frames. That's also within play. So just keep that in the back of your head when you're up here. Don't go, oh, it's just going to keep going to 28.20. What you want to ask is, are we having any kind of pattern that's shortable up here? Do we have a way to get long down here? And unless we get outside of value, I would expect us to build energy within. And then the close will become pretty important, because when we close underneath today's value, that would open us up to come back and recheck on prices into Friday's OPEX. That's my total plan on ES. I'm looking to get, ultimately identify my best last buyer, my best last seller, and get above or below as the case may be, and then look for a back test into them. That way I can manage risk by knowing what my entry, exit, and stop is, right, on each individual trade, and I don't have to go around guessing. Okay, let's go to NQ really quick. And before I leave that, by the way, I want to make sure that I cover this really quick. Okay. A couple of things. First of all, this profile is pretty damaged, right? A healthy profile looks somewhat like this. They're usually pretty geometric in shape, right? And what the market wants to do is come back and repair these little holes. You'll see that we constantly come back and repair these holes in the profile. And yesterday you can see, like, once we got below here, the profile was really repaired. It can extend below. So I want everyone to understand this concept as briefly as I can touch on it, right? Once the profile gets repaired, like at 27.55 here, the profile was repaired from Friday, right? We extended past that 27.55 all the way down to about 27.67. But once we got here, the profile was repaired. The market's done its job, and it can continue to move back up, which it's done today. So if you look at the profile, we're now opening in the middle of that profile. This profile gets repaired, in my eyes, at 28.0450 or higher, right? Really right up in there. And then it also gets repaired when we fill in. So this needs to be filled in here. So I think if I put all these lines on the chart, it's going to look just like I have lines everywhere, all over the place. This little area needs to get repaired, so please put these in your notes. 27.99 3/4 to 27.98 needs to get repaired. 27.89 to 27.86 needs to get repaired. There's other little areas within here, but those are the most outstanding. And then I would also say 27.75 needs to get repaired. And then the single prints. Remember, single prints reverse sometimes, and sometimes they don't. There are areas where you want to look for reversal, but I don't want to anticipate. I want to wait till I actually get the reversal out of those areas. If we get below value area low, which is 27.81, really important. If we come into 27.75 and we can't get back above 27.81, the most likely target to the downside is this area, both here and then the second distribution down here. This is your highest odds. I think it's not likely that we get into there because of just the stretch, 91 to 56. It's hard to imagine we have two huge days like we had yesterday. But when I get into that, finally get into this 27.5650, I want to make sure that I'm prepared to be long. Those second distributions provide fantastic long opportunities, right? And then also remember, this whole area right in here needs to get repaired, right? So if you think about it, this area gets repaired, we test into the second distribution, and then pop back out. That would be a really good place to find support for the week if we can get in here either today or tomorrow for a counter rally on Friday, right? That's my 2 cents about that. Let's go look at NQ. We'll do it the backwards way on NQ. Okay, we'll start with it, and then we'll go to the chart. Again, I'm looking to get above or below my last best seller. So I'm going to step y'all through this really quick because this is the core of all the thought process begins here, and then we work our way backwards. right? So let's start with that. Number one, value area high, value area low. In order to have a trend day down, you're going to have to trade below 27.3675, or excuse me, 67.3675. Just exercise that. 67.84 is where we're trading right now. That's a pretty good rotation down to the low. See how many pots and holes there are in this profile? All of this needs to get repaired. I would argue for open auction where we slam up and down through here. The chart's really, it was a poor high, at least in my eyes. I don't know if it technically meets Dalton's requirement of a poor high, but it was a poor high. The chart's really repaired once we get to 68.32 right? We're trading at 67.84. The bulk of volume and time was spent at the low here. We've got to get underneath the 67.36. But if we start consolidating underneath 67.36, we're trading at 67.84. Yesterday, the range was 68, let's call it 68.40, down to 67.20. It was 120 points of range. If we do 100 points of range from 67.84, right, let's just guesstimate, we take out 100, that puts us at 66.84. What's that? 66.84. If you look at 66.84, we have a second distribution. Again, tends to act as strong support. And we have a naked volume point of control in here. I want to be ready to get long out of that 66.92 to 68.80. And then if it gets really sloppy, definitely out of the 66.54 to 66.63. If I was a swing trader, those are the areas I'd be focused on for catching a U-turn back up. You will also notice that this makes a pseudo right behind it. If you look at this from a bigger picture, bottom end of the range, 66.29 to 66.11, right? And even if we trap back in, so this would be the top of the old range, right? That was where the breakout occurred. So a couple of things through here. Let's stretch this out really quick so everyone can see this. Retest of the breakout, right? Number one, trap. If it fails, trap back into range, bottom end of range, right? 66.40 to 66.20. Everyone in the brothers looking at the 6,600. I've already talked to too many. Everyone I've talked to wants 6,600 long right there. That's probably too big a bridge to get to today, but everyone is looking to be a responsive buyer. My guess is we end up getting it front run since everybody wants it. We end up front run at that area. Okay. So I expect open auction, test of the open gap, more important than the closing print as opposed to the Dalton's gap, right? There is no Dalton's gap to fill. We're inside of range. I expect two-sided price action. I know all of this needs to get repaired in here. Again, I'm going to follow process because the chart is so sloppy in here. It's hard to pick out just one area, but I would expect an attempted response out of 67.5650 to 67.50, right? Then underneath, the chart is repaired. This chart gets repaired at 67.22. We just missed that, but look for a trap back in below yesterday's low. And then importantly, can we get back up below value area low? If we fail to get back in value area low and above the 67.5650 once we get down here, right, then these areas become prime targets, okay? And they're highlighted on the chart that I posted to members for last night, right? Most importantly, I'm looking to get above my last bestseller, below my last best buyer, and I pointed this out yesterday, and I missed the trade, and I'm pissed at myself. We stopped one timing right here. See that? We then proceeded to do a 50-60 retrace right there, and I did not take the trade. At this point, it's cost me, I wasn't going to hold it overnight, but it still cost me 18 points of potential profit. It would behoove you, and guys in the room, I ask y'all to constantly monitor this. When we stop one timing, particularly early in the morning or late in the day, because it's common to happen over New York lunch, to please, please, please call it out, be aware of it. It's very important. And then if you'll notice, we did not stop one timing all the way down on NQ until the end of the day. I should have had my heads up. I left a big trade on the table. I'll make sure to pick that up tomorrow, right? Same thing applies to ES. That's my trade plan for today. Again, I'm burning the first half hour because I expect it to be, I'm burning the first half hour because my higher odds trades are coming after the first hour. And it's more important to me, even if it's a smaller trade, to catch the high percentage trade versus being aggressive when everyone else is trying to be very aggressive. On my NQ traders, Apple is heavily weighted in NQ. If Apple rallies all day expect it to at least hold up NQ even if there's sellers there, and we'll just monitor the price action. If, on the other hand, after the gap up, we end up with open drive lower, watch out for a second long liquidation. I still think you have the potential to have a lot of people trapped up here. And remember, we're pushing up into an area when you look at this profile. Remember, this whole profile is your neighborhood, right? People are trapped underneath, and they're probably going to be thinking, I know if I got long up here and I was down here yesterday afternoon and we got back up into this, I just might be going, you know what? Maybe I'll wait for a bigger pullback. Here, you can have my contracts back. I'll buy back lower, right? So it's going to be an interesting battle between how greedy people are getting as we've gone parabolic on the upside on these indexes. The other thing that it teaches you from yesterday that's really important, again, the market's going to open. I'm going to let it go the first 30 minutes, so I'm not in a rush. The other thing this teaches you, right, this is the umpteenth day in a row. Markets pull back. Even I've never been in a market ever. The best bull markets I've ever traded, they pull back, right? If you keep chasing these highs, right, just realize you're doomed for eventually getting smoked to the downside. If you assume that, hey, I can just buy a 10 or 15 point rotation down and it'll work, it works until it doesn't. The problem isn't that you're trading that way, but if you're getting smoked on the days when it doesn't work and you can't handle the 1 day of drawdown that occurs on, right, there's a hole in your strategy. Go fix it because it's going to wipe out your P&L. Anyways, that's my 2 cents, guys. Guys on YouTube, thank you for joining us this morning. I expect open auction, two-sided trading, and whipsaw this morning, probably over a wider range than we've had over the last 2 weeks, would be my guess. We'll see if that comes to fruition. I hope everyone has a wonderful, wonderful day. Follow your risk management plan. More important than anything else, you cannot get rich if you cannot keep your money in trading. That's the bottom line. Okay, I'm going to kill the YouTube guys. Again, if y'all liked it, if y'all please hit the like button. Really helps me with customer service. Just takes a second, and I would truly appreciate it. I hope all of y'all kill it today. Talk to y'all later.